The Stock of the Day is brought to you by IG, Australia's #1 CFD provider. Trade over 17,000 markets with extended trading hours on key US shares and competitive spreads, all on an award-winning platform. Get started at IG.com.
Let's head towards our Stock of the Day. News out today, it is the coal miner New Hope, reporting an 84% drop in net profit after tax in the first half amid weaker coal prices. Net profit after tax down to $54.3 million in 6 months at the end of December. Underlying earnings were down close to 60% to $215 million, driven by lower realised pricing. And New Hope also pointing to a period of recovery at its Bengalla mine. Shareholders will receive a fully franked interim dividend of 10 cents a share, compares to 15 cents in the previous half. Shares did drop precipitously at the open. They have recovered somewhat. I think they were initially down some 10%, now down just over 5%. Howard, let's start with you. Coal miners still very much a feature of our energy mix at the moment, isn't it?
Yeah, and in fact, the IEA announced that last year there was a record amount of coal used in energy production around the world. So much for Glasgow telling us that everybody was going to stop using coal. We're one of the few countries, in fact, that has dramatically reduced our coal usage. But regarding New Hope, I mean, there are two ways you can play this. At the moment, it's on a pretty low PE ratio, so it looks quite attractive, and it's always been a profitable coal mine. But the trouble is you can't predict the coal price. So you don't know what you're going to be making next year or the year after. The other way you can play it is to own Sol Patterson instead, which means you own a big piece of New Hope, without having the fluctuation being as dramatic in your portfolio. So, I think New Hope Coal is one of the best coal miners you could own, but I'm not into miners, and Team Invest members don't like miners because we like to be able to predict what our earnings are going to be in the next 5 years, and that we're confident they're going to grow. And how would you be able to be confident that, say, coal miners' earnings are going to grow in the next 5 years unless you could predict the commodity price? And people can't really accurately predict commodity prices 5 years out. So, I wouldn't personally own it, but if you're going to own a coal mine, it's probably a very good one to own.
Maybe I'll call that a hold.
Yeah, okay. I mean,
well, I'm not forcing you.
I mean, if people out there said that they're keen on having a coal mine, I'd say, sure, New Hope will do fine.
No, I mean, I understand. Obviously, we know where you are as far as energy and resource stocks, so it's not your thing. So anyway, Mark, what's your view?
We're a fair bit more opportunistic and we can do shorter term. So we tend to like our miners, particularly, and we've had a great run in critical minerals and gold and silver in the last sort of 18 to 24 months. But these guys, I mean, unless you've owned them prior to this move, I really doubt whether you'd be buying them here. I think we've obviously seen a bit of a move up in the coal price with Hormuz disruption as well, because it's an alternative energy source. But I mean, of the coal miners, this one or Whitehaven are the only two you would realistically own, and get a really solid balance sheet. They're even with really depressed coal prices below $100, they still managed to maintain $40-odd margin, which is pretty handy overall. And it still means they're producing for around about that 60 mark. There'll be underlying demand, as Howard pointed out, like coal being disappearing is not. It just is not happening at the pace that everyone would like or had predicted 4 or 5 years ago, which is why we saw that 5-year chart was had that really severe uplift on the back of there being shortages because everyone went to renewables too quickly. So it'll be part of energy plans, particularly in the likes of China and India, etc. So I'd be more inclined to be trimming here than buying, and look, if you're bullish energy because you think that the Hormuz Strait's going to be closed for much longer, I think you'd rather be in oil than coal. And I think this is probably at a stretched valuation, and you'll get another opportunity in the next 12 months to be buying it at much cheaper levels. So I'd be a trim realistically at this point, because you're not really, the dividend was reduced as well. That's mainly what people are buying it for. So,
Yep.
I'd be maybe buying on dips 15, 20% lower.
That is the view on our stock of the day. New Hope.
The stock of the day was brought to you by IG. Trade over 12,000 shares and ETFs, including major tech giants with extended hours on an award-winning platform. Get started at IG.com.